New weekday lineup. US Markets Edition. Squawk Box Asia. The China Connection. Inside India. Access Middle East. CNBC. First in business worldwide.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box, weekdays.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter.
I think it's quite hard to the foreigner to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you feasting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
My desire to keep learning, that is what drives my ambition. I sought a career change after 5 years working in corporate law to pursue a passion, which is to tell people stories and help our audiences make sense of the world that we live in.
It's a new science that could disrupt the medical industry.
The project is to understand the genetic makeup of Asians and to find out which of those genetic markers are ethical markers and not disease markers.
We're taking the bone marrow cells from the patient, making the edit, and we're putting it back into the patient, making a drug just for you.
I think that this technology is going to totally reshape how people have children.
The Edge dives into the world of
Stock Exchange Halftime Report, CNBC. CNBC. Live ambitiously.
Don't miss our all-new weekday lineup. US Markets Edition. Squawk Box Asia. The China Connection. Inside India. Access Middle East. CNBC. First in business worldwide.
Home to the world's biggest population and a fast-growing economy. Is the EV story resonating amongst Indian consumers? CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse. Narendra Modi seeks a historic third term.
Several indicators. They cannot afford to look the other way.
It's all part of the normal flow of market forces.
The stories, people and businesses behind its rise. This is your gateway to India.
We speak to the world's most influential people.
I love what I do and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
This is CNBC on assignment at L'Oréal's US Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our #1 market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures, and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone, or your hair type.
Frank Holland, Worldwide Exchange, CNBC. CNBC, live ambitiously.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter.
I think it's quite hard to the foreigners to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long poster. It's like the time when you feasting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
In its
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better, and not just better for yourself, for your family, for your community, for your country. There's no reason to watch CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
Market site in the heart of New York City's Times Square. This is Fast Money. Here's what's on tap tonight. A disappointing quarter at Tesla. A top and bottom line miss with auto revenues dropping 20%. But claims that cheaper EVs are still on track seem to be keeping the stock from dropping. Phil LeBeau standing by with the very latest. Plus, streaming higher and higher. Netflix shares continuing their post-earnings surge. Could this record-breaking move help fuel animal spirits across other parts of the market? We'll debate that. And later, Amazon, the latest Mag 7 name to signal a data center slowdown. Big deal or not? The Chartmaster's here to break down the latest move in gold and a major defense contractor on the defensive after earnings. I'm Melissa Lee, coming to you live from Studio B at the NASDAQ. On the desk tonight, Tim Seymour, Bonawyn Eison, Dan Nathan, and Guy Adami. We'll get to Tesla's after-hours move in just a moment, but first, a major market rebound on Wall Street. The S&P jumping 2.5% today, closing just off its highs of the session. The benchmark index more than recouping yesterday's losses, now up marginally for the week. The Dow also recovering from Monday's sell-off, adding more than 1,000 points, while the tech-heavy NASDAQ rose 2.7%. Those two indices snapping a four-day losing streak. But all the major averages still deeply in the red so far in April, pacing for their third monthly loss in a row. And volatility, while well off its highs of the year, still well above trend. So is today's bounce just a bit of a buy the dip moment, or can we expect more sustained strength? Guy.
Yeah, I don't know if it's a buy the dip moment. I think it's sort of the chase moment. When the VIX is still north of 30 despite today's rally, it suggests that, these rallies are going to be sort of exaggerated and the sell-offs will be the same. So I think today is exactly that. I think it's what you get in a 30 VIX environment. I don't think we're getting out of this 30 VIX environment anytime soon. I think it will continue to go up, and I think rallies, and we've said this, are going to be short-lived. Nothing changed from yesterday until today other than the fact that the market went up.
Yeah, I mean, we had those comments from Scott Bessent, the Treasury Secretary, made behind closed doors at an investor summit, saying essentially that the trade embargo between China and the U.S. should end shortly, or to that effect, that it's unsustainable to have this sort of standoff go on for much longer, which was seen as very positive, and we did see the reaction. The ground was laid for some sort of a bounce, but that really fueled us.
Well, if you think about the pragmatism of any negotiation, I mean, both parties have places they want to go, and both parties have tended to overreach before they at least begin to get in the trenches and negotiate. As folks in the diplomatic corps will always say, it's better when you're talking than not talking at all, even if you're yelling at each other. And I think that's kind of where markets are. What's interesting from the market's perspective is the stuff that really outperformed today. There were some of the more oversold names, which obviously had disproportionate bounces. But semiconductors were not the place where you really saw outperformance. And if I look at the SMH or I look at the SOX, I can see it was up about 210 basis points, and I can see that the S&P was up 2.5. And as we talk about the other 493 stocks outside of the Mag 7, they're the ones that, first of all, if you're looking at your portfolio, folks, those are the ones that have actually hung in there okay. So today was a day I think we were just oversold. I agree with Guy's call on both what you get within this type of a market environment and a VIX at 30. I just think sentiment is so poor. So many people have switched to recession as the base case. And as we're having and will have more of during earnings season, and I bet even tonight, what is that multiple for the S&P? I bet it's a lot lower than what you've known for the last few years.
Tim mentioned semis underperforming the markets, underperforming the NASDAQ 100. NVIDIA also underperforming the semis. Which is a bad sign.
I think people are full up on these names if they haven't been selling so far. I think the fundamental stories are not particularly great. I think we're going to talk a little bit about Amazon and some of the digestion that we're seeing on the CapEx spending. Obviously, that's a problem for NVIDIA. But if you're seeing CapEx spend being cut by Amazon and Microsoft and Google, that means that there's probably not a lot of demand for the products and the services that they're trying to roll out right now. I'll just say this about the market. Yes, sentiment's really bad. I mean, it's really hard to find, I said this last night, to find too many comments out there that could really kind of make you feel better about suggesting that this trade war is going to be done sooner than expected. But today's rally, 2.5%, getting back yesterday, it's not particularly impressive. And if you look at the chart, the S&P 500, it looks like a blip in the sort of volatility bands that we've been in. I guess I'd focus more on the fact that the 10-year U.S. Treasury yield is at 4.4%. It basically hasn't budged. The U.S. dollar, which is more oversold than probably any other risk asset on the planet, barely bounced today. You know what I mean? So those are the things that I'd probably focus on. And without much reaction to the commentary we heard out of Besson and those two, I'm not feeling so confident about stocks.
So silver lining. That's what you're saying. I was being...
Speaking of silver, gold making a new high, which goes into that sell America trade, buy gold here.
Yeah, I think the price action in gold is somewhat indicative of where, the oft overlooked retail investor actually feels about things. I do think you're starting to see a flight to quality or a continued flight to quality on both the retail and the institutional side. And to Dan's point about these names being over-owned or full, I think is a term that he used, people being full on these names. Without that retail presence really stepping in to buy dips, because they are the people that are going to be able to kind of move at a moment's notice. Them and fast money, hedge funds, not to kind of, to give a nod to the show as well, but your fast money type of players that are going to be able to be in and out of names. But before you start to see real type of large institutional pivoting into names, I think, we do need to see that VIX pull back. And, the rate story and the gold story is somewhat concerning. Tim has mentioned it several times. I've mentioned it. I think Guy, Dan, I think we all kind of have. The credit spread widening also doesn't give a lot of confidence in terms of deploying investment dollars when you're starting to see at least, some whispers about, widening out or some concerns around there. I would continue to look at the earnings season. I do think so much headline risk, so much macro risk does at least offer this earnings season an opportunity to kind of allow us to find some light in the darkness in terms of really understanding how profitable these companies are, how they're going to guide, and what that means in terms of multiples going forward.
It is, though, amazing to think about the market reaction to what Besson said, because Besson also said that they had not actually started talking to China. So he's making all these predictions about not being sustainable, and it won't be very long. Progress will be made, but there has not been any conversation yet, and the markets are willing to grab onto those words and rally.
Which you can understand. Tim said it. Everybody just said it. When you're in this type of environment, it's going to be sometimes sell first, ask questions later. Today was buy first. I'll say this as well. Another, talk about fascinating things. Dollar yen very quietly dipped below 140 today. It rebounded, it closed above 141. But we've been pointing that out for quite some time, and that's the lowest levels in the dollar versus the yen we have seen since August of last year. I think we all remember what happened. It's sort of getting, I guess, shaded away, or people are not focused on it because everything else out there. But dollar yen is a problem, folks.
All right, let's get to Tesla now. Earnings alert here. The EV company missing top and bottom line estimates. The earnings call gets underway in less than 30 minutes. CNBC's Phil LeBeau has been following the action. Phil, and they're not giving guidance, so they'll revisit in Q2.
Oh, this will be a fun conference call. Melissa, we usually expect these calls to be interesting. I think this one gets a little more attention than usual, given the fact that the first quarter results, we knew they were going to be ugly. You mentioned automotive revenue being down 20%. Look at these numbers, and they did miss on the top and the bottom line by a pretty good amount here, earning 27 cents a share. Street was expecting 39 cents. Look at revenue. Almost $2 billion shy of expectations. Free cash flow did come in better than expected. As you mentioned, Melissa, the company has said that it will revisit its full year guidance when it gives its Q2 update. So we'll get that sometime here in the next several weeks. Until then, we have to wait and see what happens next. We do know the company is saying that it does plan on new model production, including lower priced models, to start in the second quarter. That's production. That doesn't mean sales. And keep in mind, we haven't seen what those lower priced models, those new models might be. As you take a look at shares of Tesla over the last 3 months, the company does say that it has sufficient cash to fund the products that it's planning on building. There had been some question on the street about whether or not Tesla needs some type of a capital raise. Well, they put that to bed by saying they have sufficient cash on hand. Don't forget, the conference call, as you mentioned, Melissa, starts in about, 15, 20 minutes. And if Elon's on, everybody's going to have a number of questions they want answered. AI, AV, robotics, what's happening with his commitment to the Trump administration. Let's see how many of those we actually get answers to.
Yep, will be interesting. Phil, thanks. Keep us posted on that call. Phil LeBeau, and again, the conference call gets underway in just about 21 minutes' time. Phil was talking about cash on hand, $37 billion as of the end of the quarter, so that's a lot of cash. The question is, can they stem the declines that we've already seen in the first quarter when it comes to sales in places like China, where they're facing very stiff competition, in Germany, where sales have really slid?
Lowest quarterly revenue in 4 years, 2.1% operating margins. You can back things out and you can say, you know what, there's some things to like here. There's nothing to like here. I think one of the reasons the stock isn't lower is because, as Mel said before the show, a lot of this was sort of expected in terms of, what was a lot of the people on the street were talking about. But even with all that said, there's really not a lot to like right now in this name.
Yeah. Go ahead.
Yeah, I'll just say, listen, there's nothing to like here. And if you think about it, I think it's more about the rest of this year. And Phil just told us about production of a lower end EV. They've absolutely miscalculated on the direction of pricing globally, not just here in the U.S. And when you think about the advantage now with BYD taking over, overtaking them in deliveries in China, and they have many cars that are much, much lower price points. So if you're not going to get below $20,000 in China, they may never gain back that market share. And then when you think about what you just mentioned, whether it's Europe, whether it's here, I think the natural buyer of an EV going forward has probably been repelled a little bit by the CEO of this company. So if you're waiting for an announcement that Musk is leaving Doge and coming back full-time to Tesla, and by the way, not full-time at Tesla, he's got SpaceLink, he's got XAI.
But at least it was the way it was before.
Correct. But I'm not sure that's such a benefit because he has really just basically said, we're not doing hybrids. They pushed out a low-end EV for a robo-taxi, which is not going to come for years and the like. So I think they might be mispositioned in almost every major market that they're in right now.
Well, and I would also just say that a lot of this weakness that we've seen in the company, especially in terms of deliveries, is not something that just started when he was in Doge. So, that's a headline that probably some shareholders want to see. Others actually might want to see something different. But either way, I think you're talking about ex-government credits, margins possibly sub 10%. And that's something that ultimately is a big concern. And I get back to where we were, I think it was 2 quarters ago, where they really surprised on some metrics, or maybe it was 3 quarters ago. I don't know. But it was probably right before elections, the quarter before elections. But we went from a story where expectations had been set for at least the first 3 quarters or almost all of 25 to be rough. And that the street was kind of pricing that in. And I think then we got kind of ahead of ourselves. The reality is the reset here for 25 and into 26 can't be good, even in a world where Tesla does so much better than their competitors in terms of the impact of tariffs. Although they did say today that actually the supply chain for them is something where they see actually meaningful headwinds from the global tariff plan.
I'm going to channel my inner Dan here and try to find a silver lining.
Thank you.
In this story.
You guys are both so good at that.
Yeah. I was looking up the short interest and trying to say perhaps, shorts are kind of leaning in this name. You're not really seeing that short interest pop that you've seen in, NVIDIA and Apple and some of the other names. What I will say, if tariffs still seem to be the predominant scaring factor in the market, and I would say relatively speaking, there is some insulation there. And then you have so much negative sentiment going in. I do think if he were to make some proclamation, likely, the shares, given the quarter that they just announced, I understand that we were expecting this. I still think operating margins were expected to be around 5%, and they came in about half of that. So I think the fact that you're not seeing the stock get absolutely crushed here at least means that there is a cohort of investors that are just waiting on with bated breath for there to be some type of announcement that allows them to buy into the shares here.
All right. For more on Tesla, let's bring in Brett Winton, ARK Invest Chief Futurist. Tesla is the firm's top holding. Brett, great to speak with you.
Great to speak with you.
Tesla's about 12% of the portfolio. I'm wondering, Brett, I understand that you're a long-term investor. You want to see the robo-taxi story explained a little bit more, the lower production, lower cost vehicle, et cetera. Does the automotive business right now, right here, right now, have to work in order for those future bets to pay off?
Well, I love to hear the skepticism amongst the panel here because nobody mentioned the most important data point, which is they reaffirmed the launch of robotaxi in June in Austin. And the way to think about this, the automotive business is important because you need to deliver units into the market, which they already have millions in play, that will become prospective robotaxis as they software update the vehicles. The entire business model of this company is going to transform as and if robotaxi launches, where you go from a one-time sale of a vehicle, as the panelists mentioned, at low margin, to generating ongoing revenue off of every vehicle in fleet over time. And it just transforms the business. So the marginally important news is, can they launch and can they scale that business successfully? We think the evidence is in play that they can, given the acceleration in AI. And we think that delivering incremental vehicles into the market, for now is good to build up that base that will become robotaxis. And in the future, that'll become the robotaxi capability will be a demand driver for their production. They're actually going to be production constrained again to a material extent, in our view, once robotaxi begins to scale across the U.S.
Right. So, Brett, you love to hear the skepticism. I love to hear the optimism because as a futurist, it just seems like pie in the sky sort of stuff. I mean, I mean that sincerely because you've been following this company. You've been invested in this company for a long time. And when have they ever hit any of the targets that you suggest? And by the way, you need to make this transition. And Mel started off asking the question. They have never had their core business so bad. It's never been this bad. And if it continues to get worse in a protracted trade war, you're just not going to have the ability to invest in robotaxi and Optimus, whatever the other crap that you guys think is going to happen at some point. So I'm just curious how you think of that, because you are the futurist, and I guess maybe I sound a little cynical.
Well, one, I think you're wrong that their business has never been in worse shape. If you look at their share of overall vehicle sales, they're roughly flat. Trailing 12-month vehicle sales, they're roughly flat. As they deliver a lower cost vehicle, they should be able to sell more units in just on the kind of demand elasticity curve. And as they continue to drive down production costs, I think they'll deliver less costly vehicles to the market. And those vehicles will be utilized more. The fundamental case is when you buy a new car, you're basically buying a bundle of miles at like 75 cents a mile. If you could have somebody drive you around for $1 a mile, that's a great deal, and everybody will take that. And so once robotaxis in the market, then they become a point-to-point transportation provider rather than just a seller of hardware assets. And it just transforms the business model and begins to spit off cash flow to fund Optimus and to continue to fund the AI data center. So we don't see any cash flow issue for the business at all in terms of their ability to fund ongoing CapEx and R&D operations.
Brett, we're just about out of time, but in order for me to understand your bet on the robotaxi, I have to understand what you think the robotaxi business will look like, because it seems like there are barriers that Tesla cannot control when it comes to regulate local laws regarding self-driving vehicles, what sort of platform it will use to interface with potential people who want to take robotaxi rides. I just don't understand how this actually will operate.
Well, Waymo's operating today, and the only reason they're not at larger scale is they don't have enough hardware assets. Waymo's great. I ride it in LA all the time. I would trust my kids in a Waymo, whereas I wouldn't in an Uber. Tesla has a benefit against Waymo in that they're going to be able to deliver a less costly hardware asset, which will determine their price per mile they're able to charge. Waymo is still charging Uber-like prices, and they have an abundance of assets. So you won't have to wait 10 or 15 minutes to get a Tesla robotaxi. It'll be available immediately. We think Tesla's going to launch their own app that people will download and use in competition with Uber and Lyft, and that individual owners will be incentivized to put their vehicle into the fleet to make a few extra bucks on the car that they already own. And that's how Tesla will complete its network, whereas Waymo has to partner with the likes of Uber to do so. So Waymo's already basically cut down the wheat in the regulatory pathway. And we think they're going to launch Texas and California this year. Those are two very big states. So they'll have a lot of ability to scale within those and probably multiple states over the course of the next few years.
All right, Brett, it's always interesting to get your view. Thanks so much for joining us tonight. By the way, Brett's sticking around for the rest of the hour, so we'll get his take also on the conference call, which is going to get underway shortly.
Well, look, I think Brett does a really nice job of also spelling out for people who have wondered for years what more you're paying for an auto company that's really just a car company. And so the conversation here around robotaxi, the presumption now is that this is a $640 billion billion-dollar company. So I just heard that I think that the hardware business, the auto business, the core business, who cares about margins? It's not really worth anything, that it's really all about robo. So we're paying on the come $640 billion. This is after a massive drawdown in the stock for a business that's not producing revenue. And it will get back to ultimately, even if it is just that exciting of a business, who's paying that for this business right now? Still unproven. That's where I've always been with Tesla. It's not that the cars aren't selling. It's not that they're the biggest EV player in the world. They're out in front, but not forever.
You know, I tend to agree. Again, I'm just going to push back slightly here and also point out the fact that these stocks aren't just simply discounted free cash flows. Unfortunately, there's like a large aspect of sentiment, whether it be fear or greed, that plays into where these stock prices can go. And I just think the counter argument is that there has been a long-standing cohort of people that are willing to pay this premium, that are not, really entrenched in fundamental research and really don't care, and that do believe the quote-unquote gospel that this is going to be a transformative type of thing. So while I was a proponent of buying it at 220 and paying for a bounce, I think you've gotten that, and you've started to see the stock really pull back there. I think if it doesn't hold 220, I think you're really in for concerns. With that said, I would really kind of caution against establishing a short position in a very beaten down name when you do have a section of people that are going to be willing to pay regardless of what the multiple implies.
The sentiment aspect is something that we did not touch on with Brett, the futurist. I don't know if you can predict what the brand will be like in the future, but right now there has been some brand damage, and you have to wonder whether that will impact people's willingness or desire to take a robo-taxi. I mean, at height valuations, that was when Elon Musk had the halo effect, when it was thought that if he left the company, it would be the worst thing in the world for the company.
I don't know how to answer that. I mean, the brand damage without question, but the other side of the coin is people are dug in more than ever on the other side of that. So I'm not saying it offsets each other, but I think it's somewhat mitigated more than people realize.
We've got a news alert on potential changes to COVID vaccine recommendations. Angelica Peoples got the details. Angelica.
Hey, Melissa, Politico is reporting that HHS Secretary Robert F. Kennedy Jr. is considering removing the COVID-19 vaccine from the childhood immunization schedule. So that would basically take away that recommendation for children. Now, Politico is citing two people familiar with the discussions and quotes an HHS spokesperson saying that no decision has been made at this point, but obviously something that we're going to keep our eye on. Melissa?
Angelica, thank you. Angelica Peoples. Coming up, primed for problems, how Amazon is navigating the trade war and the multiple risks facing the e-commerce giant amid tariff uncertainties. Those details next. And speaking of tariffs, Swiss drug maker Roche Holdings looking to avoid just that. Their latest plans on coming stateside and how much it could actually impact the space. Don't go anywhere. Fast Money's back in 2.
I was an engineer at Lehman Brothers, writing trading systems, and 9/11 happened. That kind of changed perspective for me. It's also the same time my very close friend, and he decided to start this company, AppPoint, and pull me in. My name is Tianying Zhang. I'm the co-founder and CEO of AppPoint. I first came to Singapore in 2008. Really fell in love. Singapore is a place that is known for governance, stability, no drama. Quality education has always been top-notch. But what's different, I feel, in the last 5 years is that there are far more talent that's focused on technology. In conjunction with EDB, we have implemented this G2G program between Asian countries and Singapore. We actually provide these students real on-the-job work experience. So then after the education, they can go back to their countries and instantly become very employable.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
roughly, of Amazon's ad business is linked to China. It's higher than what you see for Meta and Google. They do estimate a roughly $8 billion hit as a result. And then on the e-commerce side, they say about 30% of Amazon's volume is right now tied to China. Raymond James also noting increased cost in building out things like the non-China supply chain, plus some price effects on other hardware businesses that we don't talk about as much. So we've got the satellite subsidiary Kuiper, Zoox, which is the self-driving car unit, as you guys talk about Tesla. And then you got Bank of America this week describing the tariff hit as much more widespread versus what we saw in 2018. They call it a potential new ball game for supply chains and costs. For AWS, though, the cloud side of the business, Bank of America is expecting limited tariff impacts, though a broader economic slowdown, they say, is a risk to IT spending. If you're looking for silver linings, others on the street do see an opportunity for Amazon to maybe take share from retailers who can't absorb some of the price increases as well. Plus, if current exchange rates hold, the dollar has been under pressure, that could actually be a slight tailwind for Amazon's quarter. They're going to be reporting next week, Mel.
All right, Kate, thank you. Kate Rooney, obviously a lot of headwinds there. There's also a report that it's paused some data center lease talk for its cloud division, which throws into question again the AI trade, Dan.
Yeah, I mean, listen. You know, they had that huge bump in CapEx. Investors did not like that when they reported Q4, right? And the stock really has been down 30% almost in a straight line over the last 2.5, 3 months or so. And so I think that investors might cheer the fact of the pullback. You know, we were talking, a few months ago is that, these guys are going to ask, for forgiveness rather than permission to do this. And I think now that they're faced with these headwinds about tariffs, it's not just about obviously their main products that they're selling, but it's also the uptake of the services in AWS, and now for a situation like Amazon, it's also this advertising business, which has really fueled a lot of margin for them over the last few years.
What do we say about our staff in EC?
Crack. Meaning good.
Yeah. No,
in case people might be wondering, crack meaning what?
No. They're crack staff.
Right. Like top notch.
So if they could pull up a chart over the last year, let's say, and you will see that Amazon just recently traded down to the lows we saw in August of last year. So that held like a boss, as Dan would say. Mm-hmm. As Kate just said, the report next Thursday, which amazingly is May, this sets up for a trade in earnings on the long side without question, given where we held.
We've got some breaking news out of the Oval Office. President Trump just making some comments about Fed Chair Jerome Powell. Let's listen to what he had to say.
Whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No. It's not, but it would be good timing. It could have taken place earlier, but no, I have no intention to fire him. I don't want to comment on that. That doesn't matter.
Mr. President, when can we expect the FCC to happen next week? So after all that talk about whether he would he's examining whether or not to fire, he said he has no intention of firing Powell, and that's arguably what caused yesterday's pullback, the worry that we would be destabilizing the central bank, that there'd be some questions about our credibility in the world, that we'd become like Turkey if we fired Jerome Powell. But here he's saying, nope, no plans.
Well, fortunately, somebody got in his ear. I mean, the two texts or whatever, a couple days ago, I think over the weekend, his termination, and I'm paraphrasing, please don't at me, but something to the effect of his termination can't come fast enough. Now, I don't know if that was meant to be his leaving date in May of 2026 or his actual termination. I don't know, but he definitely threw it out there. Fortunately, I think somebody probably said, it's probably not going to be a great thing. We want to ratchet back a little bit. And that is a stabilizing thing.
By the way, we're looking at the after-hours action in the SPY, the S&P 500 ETF higher by 1%. NASDAQ 100 also higher by just about 1% in the after-hours on the back of these comments. So again, being viewed very positively here.
Look, they're great headlines. They're great headlines, and clarifying that the Federal Reserve is left alone is a great thing by President Trump. And I think it's a dynamic for markets that I'm not so sure yesterday's tail-off was Powell related. I do think if you look at the dollar and you look at Treasury markets, they could have had a greater impact here. But ultimately, my sense is, and if you read strategists, economists, and market pundits everywhere. I don't think anyone was really expecting Powell to be fired. So I think market weakness is for reasons related to people worried about recession priced into stocks.
Yeah, I'll just push back at that. I mean, Kevin Hassett, his economic advisor in the White House, has said they were studying whether to do it. And I don't know why you would trust this back and forth. We've seen this, he blinked on the tariff stuff. It doesn't mean that they're going to do anything any differently. So just wait. May 7th, this is going to be fireworks, man. If they don't say the sorts of things that you expect into it, I think he's going to turn it right back up.
By the way, there's some comments also about China. He says that I think we'll make a deal with China. He also has told reporters that he'd be very nice in negotiations with Beijing and that tariffs on imports from the country would fall significantly following a deal, but not to zero. So also some positive comments regarding trade specifically with China, which would be a very important development for the markets here.
I'm just blown away. If I had told you that the United States stock market would rally because there was a reaffirmation that we were going to maintain an independent Federal Reserve, I don't even know how to wrap my mind around that. I just think the fact that
we were going to be potentially restructuring the U.S. economy to reindustrialize after 150 years. I mean,
fair enough, but I think this gets at like the very lifeblood of what makes capital markets and why there is, why the United States why the USD is the reserve currency, why there's so much faith in government bonds, et cetera. So it just kind of blows my mind, and for me, it just speaks to the fact that I do think you should continue to see volatile trading. You're going to look to pick your spots, entry and exit points, but the fact that this is actually a trading catalyst is a bit worrisome, and I think it's something that you should take into consideration as you're sizing your positions and when you're allocating capital.
The comments we've been talking to happening in the Oval Office just moments ago. Eamon Javers was in the Oval Office. He joined us now with the full report. Eamon.
Yeah, Melissa, that's right. I happened to be in the Oval Office with some reporters talking to President Trump at an event where he was swearing in the new director of the SEC. I was able to ask the president whether or not he intends to fire Jay Powell and whether he believes he has the power to fire Jay Powell. And what he said was, I don't want to talk about that in terms of whether or not he has the power to fire Jay Powell. He said, because I have no intention of doing that, never did have any intention to do that. He said the press simply runs away with speculation sometimes, but the president here reaffirming the idea that he does not intend to fire the chairman of the Federal Reserve or to attempt to do that. That was one item that was interesting to me. He also answered a question on China in terms of the tariffs and whether or not he's concerned about the impact on West Coast ports. The president said that ultimately he believes the tariffs are going to be good for the country overall. He was asked whether or not he's negotiating with the Chinese right now. He didn't provide any details or specifics about exactly where those negotiations stand. But I also asked him about tariff rates overall, and the Treasury Secretary's comments earlier today that the tariff rates as high as they are amount to effectively an embargo on trade with China altogether. The president says he does agree with the Treasury Secretary that it is effectively an embargo with China right now, but that he doesn't think that tariff rates are going to stay where they are right now. He said they're going to come down significantly. I asked him to what level. He said not to zero, but he implied sort of north of zero, but much lower than where they are now. So this is a president, Melissa, I've got to say, who seemed eager to send the kinds of signals to the stock market that the stock market wants to hear right now, wanted to be very conciliatory about the Fed, and very much to indicate that he's in deal-making mode with China, Melissa.
What's interesting, Eamon, is what you said about the president saying that he wouldn't comment on the status of talks with China, although Secretary Besson earlier in the day said that talks have not started. I'm wondering why there's daylight between the two explanations.
Well, reporters tried to press the president in the Oval Office just now on, what updates can you give us? Have you talked to Xi Jinping? Have you had any meetings? Where are these discussions specifically? And the president just sort of kept going back to his argument that there is going to be a deal. Things are going well with China. He's confident in his relationship with Xi Jinping, but no real specifics in terms of where those negotiations stand, who's meeting with who, what dates the meetings are taking place on, whether there have been any offers exchanged, just the president asserting that he feels confident that there will be a deal here. I also asked him if he has spoken to or speaks regularly with Jay Powell, and he declined to answer that question.
All right, Eamon, thank you so much. Eamon Javers from the White House at this hour. Again, we're looking at an after-hours rally on top of the gains that we made in today's session on these comments regarding President Trump having no intention of firing Jerome Powell, and also the positive comments he's making about China in terms of resolving the trade embargo that is in place right now.
Yeah, all good. Maybe this will help the market to be a bit less squirrely. And
yippee.
The word, huh?
Yippee.
Yippee.
Well, squirrely's a good word as well.
That's what he used, yippee.
Yippee. Yips. Yeah.
Well, what's interesting also is, again, if you think about those kinds of comments, China tariffs are going to come down. The idea of tariffs as a panacea for a deficit is something I've just struggled with. And so this is really getting you back to dollar-friendly and rates-friendly, bond-friendly type rhetoric that I think can still strike a balance between let's level the playing field, let's get back what's ours, but let's not change how we actually raise revenue in this U.S. government. By the way, Eamon was like right there.
Right
like,
there.
We had this breaking news.
Like,
There's Eamon.
I happened to be in the Oval Office when he made these comments.
He's so good. One last comment here. Is this a good negotiating tactic to tell your adversary, to tell the folks that you're negotiating against what you're going to do? Because if you're China, it might just embolden you. So the idea that we're going to get these kind of half-assed sort of commentary back and forth, this and that's going to cause these rallies or these sell-offs. I just think that the risk is still to the downside until there's something materially coming out, not just these sorts of one-off comments like this.
By the way, in the after-hour session again, we're seeing the indices across the board rally by more than 1% apiece. We're also seeing shares of Tesla for one. Big China exposure. Obviously, the conference call is going on just 5 minutes in, but the China exposure aspect is sending it higher by 4%. Apple is up. NVIDIA is up. This is fantastic news for the market, Bonawyn, if true.
If true. That's the caveat, and I think you need to go on ahead and stick your hat in that one. We've just seen so much back and forth that I'm just not sure how much confidence you can put on anything that you're hearing. At a moment's notice, you might get a reversal of what was just said or some statement that contradicts what was said on or off record. I just think it makes for a tough trading environment. With that said, it presents opportunity and not one that one should shy away from necessarily. But I am still a bit more cautious. I'm definitely not pessimistic, but I do think bear market rallies are a real thing, and I do think you might want to look at names that you're a little bit too full on or where you don't necessarily see where they fit in your portfolio, looking for opportunities to sell into these rallies and then allocate elsewhere.
All right, we're going to take a quick break. Fast Money, be right back.
CNBC. Live ambitiously.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any Go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by... Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
Before they talk to Wall Street, they talk to John Fort and Morgan Brandt. Closing bell overtime.
I think there are other stocks that are more attractive risk rewards here. But yeah, I think this, I'll stick with the point, which is I think this is one of the more recessionary resilient stocks you can find. And it's been tested. We've been tracking this for 25 years. And, you've seen Netflix hold up in a lot of economic cycles and different types of cycles over time. So I think that'll be the case here. Also, you got a situation now where they've just hit record high operating margins. And my guess is that they're going to lean into content spend later this year as they really expand the bundle and get more and more into live sports and make the service more and more compelling. So I think it's recessionary resistant. I think valuation's reasonable, not dramatically compelling, but reasonable. I continue to like the stock.
Mark, you mentioned a lot of good things in terms of them being able to grow top and bottom line. You mentioned the multiple. I kind of want to dig in on the price to sales multiple at 11 times. Can you kind of give us a little bit of background in terms of where that tracks historically, and then where do you think is kind of like the equilibrium point in terms of where you can get comfortable in terms of the multiple that you're paying on revenue?
Yeah, I don't typically look at it on price to sales. One could, but the beauty of Netflix is how it's changed over the last couple of years is, hey, we got free cash flow now. Like, we got material amount of free cash flow. They're also buying back stock. They had a record amount of share buybacks this last quarter. Now, I don't know if that's arrogance, stupidity, or what, or just a dramatic amount of confidence because they're buying all-time amount of stock at an all-time high in the stock. That's very bold, but I think they've got good reasons to be bold. I look at it on a PE basis, price to earnings basis. It's expensive. It's trading at like 35 times earnings. That's at the upper end of where it really should trade. So I don't think you got a lot of multiple expansion from here, but the stock can go higher because they're going to be giving you 5% earnings growth, and so that's how it can compound from here. So that's the PE multiple is what I would suggest that you look at instead of the price to sales multiple.
Hey, Mahanes, it's Tim. That's Guy's nickname for you, but we love having you on. And I guess I'm just curious, I hear also Netflix is now signed on for their second live NFL game. And as a Netflix shareholder, I'd be kind of disappointed if they went really hard at sports because I think the networks kind of fight each other over those costs. But the content slate, while $18 billion, they're producing at such a, I'd say efficient level. I'm just curious your thoughts on all of this. Like, where do you want to see them spending on content? Do you want to see them more in sports? What do you think?
Yeah, I guess at the end of the day, I do. I want them to get more into live events, and there can be they don't have to be. You don't have to get in there for big negotiations on major league rights. But there's smaller leagues you can get into, perhaps, and there are one-off events. Maybe the Formula One races, something you can build stories around. I think that's great for Netflix. But I think this is absolutely, Tim, I think this is where they're going. I think 5 years from now, you're going to see more sports, and eventually you're going to see major league sports on Netflix. And I think their strategy is every year they're going to bump up that content spend by $1 billion. And they're going to be able to outspend everybody out there. And they can do it because they've got far and away the largest audience on which to kind of amortize that spend. So for live sports, Netflix is coming for you. They may talk it down, but I think they're coming for you, and they're willing to write bigger checks than almost anybody else out there. Over time, we'll be able to afford.
Mark, great to speak with you. Thank you. Mark Mahaney, Evercore ISI. We got to get to Tesla, just hitting after-hours highs, giving up 5%, but up 4.5% still. Let's get back to Phil LeBeau with headlines from the call. We got Elon Musk talking about Doge. Phil.
Yeah, and right off the bat, he gets to the question that many people have, is whether or not he will stop his activities with the Trump administration, or at least curtail them. He basically says that starting next month, he will be spending much less time with Doge and spending more time with Tesla and his private business activities. He defended the work of Doge, saying it's important to weed out the fraud and the corruption in government, and he's proud of the work that Doge has done, but he believes that now that it's essentially an entity that is set up within the Trump administration, he can scale back how much time he devotes to it. So that is one question, Melissa, that people wanted right off the bat. And one other quick update, just a couple of seconds ago, he did indicate that they are on schedule for the launch of Robotaxi in Austin. No details yet in terms of how big it'll be, but that is the June launch that they've been talking about for some time. Melissa, I'll send it back to you.
Phil, keep us posted on the call. Phil LeBeau. The stock is up just over 4%. Color me skeptical, but that seems a sort of an anemic bounce.
Well, think about one of those was in January, I think, and please don't at me if I'm wrong, but the stock closed around 385 or so, came out with an abysmal quarter. Margins were horrible. The free cash flow, the beat of $600 million was on back a sale of Bitcoin or mark-to-market of Bitcoin or something like that. We had a conversation that if you're just looking at this fundamentally, stock should be 320, trade up to 420, 425 over the next couple of weeks. So here we are at much lower levels, obviously, and we're seeing a similar thing. This can last. 220 was a low back in October. You can bounce off this level for a while, but nothing changed fundamentally, in my opinion.
Look, think of what futures are doing. I mean, let's think about also a stock that's, have one of the highest betas to the market. I'll chalk a lot of this up to that. I'll talk this up to the rhetoric from President Trump, things that are supportive and really have some halo effect for Elon here.
All right, let's bring in Brett Winton, the futurist at ARK Invest, the chief futurist. I guess there's a legion of futurists there. Brett, great to have you with us again. You got what you wanted in terms of, it's a little scant on details so far. We're only about 16 minutes in the conference call or so. But you got an affirmation that robotaxi will launch in Austin in June, which you wanted. We have Elon Musk getting back to work at the company as early as May in terms of scaling back his involvement with Doge. We got everything we wanted, and the stock is up 4%. What do you make of this?
I think that the stock it's clear that the stock does not discount the autonomous future that we envision. There's all the skepticism on the panel. Think about what a car could generate in cash flow if it can do 100,000 miles at $1 a mile, and the cost to operate that vehicle is less than 20 cents a mile. So that's $80,000 in revenue that can be shared with the person who owns the car and is cleaning it, and then flow back to Tesla. Right now, if they sell a Model 3 for $50,000, they're getting $5,000 in operating profit. Right, so there's multiples in potential profit per vehicle in fleet that they get as robotaxi launches and scales. The question is, how quickly is it going to scale? And he was indicating that it'll begin to hit the financial statements next year in a material way, which is consistent with how we think about the scaling of the business. And we'll see where it goes from there. But like one of the panelists was saying, it's like, on today's metrics, this stock is overpriced. Yes, equities are a discount of future cash flows, and the cash flow characteristics of this business are going to change when it becomes a robotaxi business.
All right, Brett, thank you. Brett Winton of ARK Invest, the chief futurist there.
Well, you better hope it happens sooner than later, because at some point, there is gravity in markets, and everything that he just said about what he sees in his crystal ball in the future is basically pie in the sky. Take the over when, listen, if the complexity with Waymo is who owns the fleet and how does it, scale and the hardware that they need, what they're talking about is, when someone buys a Tesla and cleaning it and electrifying it and having it sent to a depot and all, that's just a bunch of garbage. It's just not going to happen. I mean, this is like Jetsons sort of stuff, and I'd take the over if we want to do 2030 on that.
What's the flip side on Waymo and what's not priced in, to essentially, it's fascinating to think about if this is really so significant for Tesla. Even if they are hardware constrained, that seems to be the easy link, right? Isn't everyone kind of presuming that hardware's not a problem? So why isn't Waymo garnering a much greater valuation?
Coming up, chartmaster Carter Braxton Worth sees cause for concern in gold's record run. He lays out the case for buyer beware. Back in 2.
CNBC. Live ambitiously.
There's so many different ways to talk about the plastic issue. I really see plastic as a little bit of a Trojan horse because the majority of consumers understand plastic waste, but they don't understand the idea of other waste. And I really see the circular economy as being enabled by the consumer momentum and knowledge around plastic. For me, the transition to a circular economy, it's not a plastic problem. It's really just because it's not profitable to do that.
If you make it profitable for companies to do so, it doesn't become about, my ESG commitments, my net zero commitments. It becomes something that's part of the DNA because, let's be brutally honest about it, most companies, if not all companies, are still about making profit.
Absolutely.
Sponsored by
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
comments, and of course the other comments sending the markets higher. The comments about Fed Chair Jerome Powell saying he has no intention of firing Jerome Powell. He wants Powell to be more active on rates, but no intention of firing Powell, putting to rest some reports and speculation that he was looking into it. Take a look at some of the retailers here, because, of course, retailers very exposed to tariffs, specifically to China. Nike, Starbucks, Target, Walmart, all trading higher. Automakers, we were just talking about Tesla, but automakers here, GM, Ford, and Stellantis, slightly higher here. So we're tracking all these sectors, all the moves, because resolving the trade war with China would be a major step forward.
The question is, back to this Oval Office, these statements, what was the context here? Were these planned? Because it almost seems like this is something that wasn't exactly supposed to be announced today. I mean, what was the context of that Oval Office meeting? Was it just a meeting with reporters?
It was to swear in or, give the oath to the new SEC head. And so he was asked by reporters in the pool about some of these issues with Powell and China.
If I'm cynical here, I would say be careful about that. Just because, again, I think these were off-the-cuff comments. Having said that, it is clear that these are the latest thoughts that at least have come through to the White House, and they're right on them.
Well, it's interesting because the context is also Secretary Bessent was out this morning making some comments that sent the markets higher. And then who does he invite into the Oval Office? Eamon Javers is in there. What do you think Eamon Javers is going to ask about? He's going to ask about Jerome Powell.
What? Look at you connecting dots. So again,
I'm not saying, but I mean, it lays the groundwork for market rally and a continued rally into tomorrow.
No doubt. So let's look at the gold market tomorrow. Let's see how gold now. Gold was probably selling off right now on the back of this. One of the last legs higher was probably on the back of the Jerome Powell stuff. We'll see. But I think any sell-off in gold, you gobble up very quickly, Mel. Gobble.
Well, you say gobble.
Gobble.
Chartmaster might say something different. Gold briefly topping $3,500 an ounce for the first time ever today, marking the 25th time it has set an intraday record this year. The precious metal is up nearly 30% in 2025, and the Chartmaster says prices have gone too far, too fast. Let's bring in the Chartmaster, Carter Braxton Worth of Worth Charting. Carter, what do you see?
Well, yeah, I mean, a big day today. I think the key thing is a major milestone was reached. Gold adjusted for inflation literally today went back to its 1980 peak. This chart you see is just gold in nominal terms, and it's almost 4x what it was in 1980. But the next chart is the chart that's so important. We got literally to the penny. It was January of 1980, adjusted for inflation. 45 years later, gold has recouped all its losses in real terms, and it hit its head, stopped to the penny. Gold reversed, closed on the low. This is a more day-to-day chart. And then last chart, look at this chart with its 150-day moving average. We are now 25% above the 150. That's only happened 4 other times in the past 25 years, and each and every time gold sold off essentially 10% or more. So whether you love gold for a double from here and you have long-term views of the banking system and Bitcoin and fiat currency, or whether you're an inflation or deflation person or a gold bug, doesn't matter. Tactically, from a sequencing point of view, gold is steep and uncorrected.
All right, so a check back of about 10%, you said, Carter?
I think that should be the minimum.
All right. Carter Braxton Worth of Worth Charting. Well, you know what? I bet gold is going to be a hot topic when our next Fast Money Live takes flight. Thursday, June 5th, join us here at the NASDAQ Watch a Show. Get one-on-one time with the traders. Walk away with a special gift and a 6-month subscription to CNBC Pro for new users. To join the action, scan the QR code on your screen or head on over to cnbcevents.com/fastmoney and get your ticket. Up next, final trades.
One thing I've learned over the years is don't yell at the stock market. Why do we follow the markets? It's to make money and because it gives us a lens on how the world works. Ambition is the ability to see yourself in the future and to take steps right now in the present to become that future person. CNBC viewers are very ambitious. At CNBC, we are in the dreams business. You're watching to learn something.
The power plays are here. breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC. Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime. Don't miss our all-new weekday lineup. US Markets Edition, Squawk Box Asia, The China Connection, Inside India, Access Middle East, CNBC, first in business worldwide.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter.
I think it's quite hard to the foreigners to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you're visiting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
Us. Stocks recovered sharply over the course of the day Tuesday on hopes that some of the U.S. trade tensions could ease. Let's jump into some of the biggest interviews and conversations happening across the CNBC in the United States following this check of the markets and where they landed on the day. As you can see, the Dow Jones Industrials ended the Tuesday up 2.66%. The S&P 500 closed Tuesday out at 2.5%, and the NASDAQ Composite up 2.7%. And we begin with finance leaders from around the world descending on Washington, D.C. this week. Tariffs, the trade war, front and center for them. Our own Sarah Eisen is there and spoke with European Central Bank Chief Christine Lagarde. Lagarde was asked about the ECB's latest rate cut and also the pressure put on U.S. Federal Reserve Chair Jerome Powell by President Trump. And she was also asked about cutting rates.
Monetary policy decisions are driven by the economic circumstances that we face. And I think that all central bankers around the world are loyal to their mandate and observing the facts and analyzing the data as well as they can. This is what we've done in Europe. We have inflation coming down seriously. As I said, last reading 2.2%. Our projection for 25 is likely to be 2.1%. Inflation expectations are very anchored around the 2%, including in the medium term. And we have growth, which is projected to be 0.98%, depending on whose projections you're looking at. The U.S. is a different situation, and the impact of tariffs will be different on the two economies.
What is your expectation there? Higher inflation in the U.S.?
I think the IMF came out with some projections this morning, and they did increase the inflation projection for the United States. But it's inevitable. If you raise tariffs on goods coming in, this is increasing prices, added to which it creates uncertainty. So the combination of the two is bound to wake up a little bit.
I know you're close with Chair Powell. I mean, I know you communicate pretty often. Have you talked to him about some of this new political pressure? But speaking of some of the reaction here, I'm wondering how you're feeling about the European banking system, if there's been any spillover, considering some of the financial stress we've seen as a result of these announcements.
We haven't seen spillovers. And what I can say is that under the regulations that we have, which is Basel III, with reference to a Swiss town in which we meet on a regular basis, but which has brought all the regulators and sometimes the supervisors as well together to make sure that we don't have a cataclysmic disaster like we did in 2008. I was there. I don't want to see that again. So our banking system is, I think, solid. The banks are far more better capitalized than they were before. And I think the probably more scrutiny applied to supervision than was the case at the time has served us well. And we should really abide by those principles. Not always pleasant, not always, stress testing and scrutiny is always resented because you want to run your business. But to the extent that it is conducive and critical for financial stability, we need to do that.
I think you mentioned increased trade with China in one of your answers as a potential impact on Eurozone economy. I'm curious what your expectations are there. I mean, a potential trade deal with China, is that something you could envision?
That is something that the European authorities in trade, that is the Commission, will have to decide and will have to conduct. But it's an economic natural consequences or second round effect, if you will, of very strict and very high tariffs imposed by the lead partner of China. China will face a moment where it has overcapacity and it has to ask itself, what do I do with that overcapacity? Where do I sell my goods?
And you think Europe is a destination?
It's one option for them, for sure, but it's not for me to speculate what they're going to do with that. And I hope that a trade deal will be something that can be considered by both partners, the United States and China.
I mean, there's an effective trade embargo between them now, 145% tariffs, 125% tariffs the other way. How disruptive is that for Europe and for the rest of the globe? Just those
I think
two?
It's too soon to say. It's too soon to say. But they're hopefully, as I said, there will be a trade deal between these two economic giants, and that will be, acceptable or not too unacceptable for both partners as deals are. But as far as we're concerned, we're going to focus on our business and make sure that our economy is competitive, that our regulatory environment is rock solid but simplified, that we have a stronger and wider capital market union, and that we address all our vulnerabilities as they have arose as a result of the shocks.
I mean, it's such a change when we spoke in Davos at the beginning of this year on a panel. The concern around Europe was Europe is uncompetitive. Europe has too many regulations compared to the U.S., which is exceptional now, with deregulation, pro-growth policy. It feels like the tables have really turned, but long term, I do wonder if those questions are still going to plague Europe.
We shall see, and time will tell us whether this sort of whether the Europe's hour that I very much see at the moment will turn into a new Europe that is more competitive, less regulated, more efficient, keeps some of its savings at home to invest in what is necessary.
Is that realistic?
Defense, energy.
So many governments.
It's hard. It's hard. But look, whenever we had major crisis, whether it was in 2008 with the great financial crisis, whether it was with COVID, the Europeans, rolled up their sleeves, pulled up their socks, and delivered something that was totally unexpected. The Next Generation EU 1 trillion investment, which is being spent at the moment on a joint basis with joint borrowing, we would never have dreamed of this. Well, I think that this is another time when Europe can just grow up and be stronger.
But we are in a technological revolution at the same time, and Europe doesn't have a ChatGPT or Google or an Apple or a Meta. Why is that?
I think it has to do with the fact that there was not so much focus on productivity. So that's number one. Number two, the ecosystem that is so vibrant in this country, in the United States, which combines equity funds, capital venture funds, the innovation around universities, which have played a critical role in those inventions. All that combined created those ecosystems that gave birth to these giants. I think those are conditions that can certainly be recreated, and if Europe is as attractive as it is with freedom, with stability, with credibility, and the determination to execute on the plans, I'm sure we can do well.
What about...
There are other areas, by the way, where Europe is a champion, but I don't want to brag about Europe. I just want to make sure that...
Well, it's your job.
We do.
You have been a champion of Europe's steadfast champion, which is why you're in the job, I think, in part. But what about a potential end to the war in Ukraine? I mean, now that there's this U.S. diplomatic push, what would that mean for Europe's economy?
I think what it means first is peace for people who've been at war, and in particular peace for the Ukrainian who've demonstrated their aspiration to freedom and their determination to fight for their territory and to defend their country. That's what it means first and foremost. Then, provided that that happens, and I very much wish that peace will be about, then it will be reconstruction. And it will mean, supporting, helping, dealing with the needs that Ukraine has, and processing the application for European Union membership, which is something that has been decided.
What is your chief mission here in Washington this week? I mean, I feel like the bilateral meetings take on a new
To meet you,
importance.
that was my first mission.
That, of course, thank you for the time on that. But seriously, as far as talking with U.S. counterparts, how do you think this whole trade situation changes everything?
I think we will go through a period of at least, I don't know how many are left, but probably, 75 further days of trade talking, negotiating, behind curtains negotiations, and I'm sure that there will be plenty of that during this week, but not only during this week. And that is unsettling, because it's a period of uncertainty that nobody likes. You don't want to invest, you don't want to employ, you don't know where you're going to go in terms of economic development. So that is taking place, and I think that at the end of that period, we need to have a system which at least is predictable, is reliable, and those are really very strong wishes that I have, and that things will not change every other week after that.
Is that why you don't have recession forecast? Because you think that'll happen?
We had a recovery that was sort of taking roots, and hopefully, given the fact that we have this large economic zone, that we trade amongst ourselves a lot, that we're going to expand the trade relationship that we have. Europe is the first trading partner with 72 countries around the world. This is no small potato, and we're going to activate those trade links as much as we can. So we don't see a recession. No, we don't.
In Europe or the globe?
I'm talking about the euro area for the moment.
Lagarde also said she thinks the euro region is heading toward the ECB's 2% inflation target for this year. Well, it was one heavy hitter after another on CNBC Tuesday. When we come back, we'll go from the ECB head to the CEO of Goldman Sachs. Stay tuned.
CNBC.